The crypto market is approaching a pivotal moment, and the decisions you make in the coming months could determine whether you secure life-changing profits or get caught in the next major downturn. Bitcoin billionaire Arthur Hayes, co-founder of BitMEX and one of the most respected voices in crypto, has laid out his strategic roadmap for navigating 2025. His insights are not based on hype or speculation, but on macroeconomic trends, liquidity cycles, and historical market behavior. If you want to position yourself correctly for the next phase of this bull market, you need to understand three key elements: why Bitcoin is still the foundation, how to identify the best altcoin opportunities, and, most importantly, when to exit before the cycle turns. Why Bitcoin will reach $250,000, and possibly higher. Arthur Hayes has consistently argued that Bitcoin's price is not dictated by technical analysis or short-term trading patterns, but by global liquidity. Central banks, particularly the Federal Reserve, are trapped in a cycle where they must continue expanding the money supply to prevent financial instability. The U.S. Treasury market, the backbone of the global financial system, is showing signs of stress, and when volatility spikes, as measured by the MOVE index, policymakers inevitably respond with stimulus. This means more dollars chasing a fixed supply of Bitcoin. Hayes predicts Bitcoin will hit $250,000 not because of a speculative frenzy, but because the math of monetary debasement makes it inevitable. The real question is not whether Bitcoin will reach this level, but when. His advice? Ignore short-term noise. The biggest gains will go to those who hold through volatility rather than those trying to time every dip. The 2025 altcoin season: selective, not speculative. Unlike previous cycles, where almost any altcoin could surge, Hayes warns that the next wave will be far more selective. Many projects from the last bull run have failed to deliver real utility or revenue, and investors are becoming more discerning. However, this doesn't mean altcoins are dead, it means you need to be strategic. Ethereum, despite being the most hated Layer 1 blockchain, remains Hayes' top altcoin pick. Its developer ecosystem, institutional adoption potential, and role as the foundation for decentralized finance, DeFi, make it a strong contender for outperforming newer, flashier competitors. Meanwhile, XRP could see a resurgence due to its regulatory clarity and political connections, particularly if U.S. policymakers push for compliant crypto solutions. The key takeaway? Avoid low-quality, hype-driven tokens. Focus on projects with real adoption, revenue models, and staying power. When to sell? The signal most investors miss. The biggest mistake crypto traders make is holding too long, hoping for one more pump. Hayes doesn't rely on price targets or gut feelings to time his exits. He watches the bond market. When the MOVE index, which tracks treasury volatility, surges, it's often a sign that liquidity conditions are tightening, and a market top may be near. Historically, when central banks panic and intervene, as they did in 2020 and 2022, it creates a short-term sugar rush for risk assets, including crypto. But this is usually the last gasp before a downturn. Hayes' strategy is simple. When the Fed signals another round of money printing, that's not the time to get greedy, it's the time to start taking profits. 3 unbreakable rules for 2025. Bitcoin first, altcoins second. No matter how tempting altcoin rallies become, Bitcoin remains the safest and most reliable asset in crypto. Build your core position before speculating. Avoid leverage. The market will have violent swings, and over-leveraged traders will be wiped out. Hayes' success comes from patience, not reckless bets. Sell when the Fed panics, not at the top. Trying to perfectly time the peak is a fool's errand. Instead, watch for macroeconomic shifts and exit gracefully before the crowd. The smart investor's advantage. The next 12-18 months could be the most profitable period in crypto history, but only for those who approach it with discipline. Arthur Hayes' framework isn't about chasing hype, it's about understanding the deeper forces that drive markets. If you follow these principles, you won't just survive the next cycle, you'll thrive in it. Now, the question is, will you act on this knowledge, or will you look back in regret? The opportunity is here. The strategy is clear. The rest is up to you. The perils of leverage. Why Arthur Hayes warns against it. Leverage is the fastest way to turn a promising crypto portfolio into dust. While the temptation to amplify gains with borrowed funds is strong, Hayes emphasizes that the crypto market's extreme volatility makes leverage a dangerous game. Even seasoned traders can get liquidated during sudden 20–30% swings, events that happen regularly in crypto. Hayes' perspective comes from experience. During his BitMEX days, he saw countless traders blow up their accounts by overleveraging during what seemed like obvious moves. His rule is simple: if you can't afford to lose it, don't bet it. The most successful crypto investors build wealth steadily, not through reckless margin trading, but through disciplined accumulation and holding. Bitcoin first, altcoins later, the smart accumulation strategy. Before even considering altcoins, Hayes insists on establishing a strong Bitcoin position. Why? Because Bitcoin remains the market leader, with the deepest liquidity, institutional adoption, and the clearest store of value thesis. His approach: allocate a core position, 50–70%, to Bitcoin. This is your foundation. Use a smaller portion, 20–30%, for high-conviction altcoins, only after Bitcoin is secured. Keep the remainder in cash, for buying major dips. This method ensures you participate in Bitcoin's upside while still having exposure to high-growth altcoins, without overexposing yourself to their extreme risks. Selling when the Fed panics: the art of exiting gracefully. Most investors wait too long to sell, hoping to squeeze out every last dollar of profit. Hayes takes a different approach. When central banks start emergency stimulus, it's time to reduce risk. Here's why this works. The Fed only intervenes when markets are in trouble, meaning the best gains have likely already happened. Liquidity injections create temporary rallies, but these are often exit opportunities, not new bull runs. The smart money sells into strength, not at the absolute top, but when conditions are most favorable. Hayes doesn't try to perfectly time the peak. Instead, he scales out as euphoria builds, ensuring he locks in profits before sentiment shifts. Discipline over hype. Hayes' success isn't based on luck, it's built on these three principles. The crypto market rewards patience and punishes greed. If you can follow these rules, you'll not only survive the next cycle, you'll outperform most traders chasing quick riches. The question remains: will you have the discipline to stick to the strategy, or will you let emotion dictate your decisions? The difference between those who succeed and those who don't often comes down to this choice. For more in-depth analysis, subscribe and turn on notifications. We'll be breaking down every major market move as 2025 unfolds.